A low credit score can quietly cost you $40,000 or more over a lifetime in extra interest. That is not because you bought one huge thing. It is because a weaker score can raise the cost of your car loan, mortgage, credit cards, insurance in some states, and even deposits for utilities or apartments. This is Money Hacks USA, where we make your money work smarter. Today, we are talking about how to raise your credit score fast using moves that are legal, practical, and boring in the best way. No fake credit hacks, no buying trade lines from strangers, no magic disputes. Just the levers that can actually move a score: payment history, credit utilization, credit mix, account age, and new applications. Before you try to raise your credit score, know what kind of score you are looking at. Most lenders use some version of FICO, which runs from 300 to 850. Vantage Score also runs from 300 to 850, but it can react a little differently. A score under 580 is usually considered poor. Around 670 is generally good, and 740 or higher can help you qualify for better rates. The fastest gains usually come from fixing the two biggest areas: paying on time and lowering credit card balances. Payment history is the biggest factor in many scoring models, and credit utilization is usually the fastest one you can change. So if your score dropped because your card balances are high, you may be able to see movement after the card issuer reports a lower balance. Credit utilization is the percentage of your credit card limits you are using. If you have a $5,000 total credit limit and your balances add up to $4,000, your utilization is 80%. That looks risky to scoring models, even if you pay every month. A strong target is under 30%, but under 10% is often even better. Using the same $5,000 limit, 30% means keeping reported balances below $1,500. $10% means below $500. The key word is reported. Your card company may report your balance before your due date, often around the statement closing date. Paying before the statement closes can lower the balance that gets reported, which can help your score faster than waiting for the due date. One simple move is making 2 payments per month instead of 1. You do not need extra money for this. You are just changing the timing. For example, if you normally spend $900 on a card with a $2,000 limit, your utilization could report at 45%. But if you pay $450 halfway through the month and another $450 before the statement closes, the reported balance may be much lower. This is especially useful if your limit is small. A $600 balance on a $1,000 limit looks like 60% utilization. That same $600 balance on a $6,000 limit is only 10%. Timing does not erase debt, but it can stop normal spending from making your score look worse than it really is. Another fast move is requesting a credit limit increase on cards you already have. This can lower your utilization without paying off the full balance immediately. Say you owe $1,200 on a card with a $2,000 limit. That is 60% utilization. If the issuer raises your limit to $4,000 and your balance stays at $1,200, utilization drops to 30%. That can be meaningful. Use this carefully. Ask your issuer whether the request uses a soft pull or hard pull. A soft pull usually does not affect your score. A hard pull can temporarily cost a few points. Also, a higher limit is not permission to spend more. The win comes only if your balance stays the same or goes down. Late payments can hurt badly because payment history carries a lot of weight. A payment is usually not reported late to the credit bureaus until it is at least 30 days past due, but fees and penalty interest can hit earlier. If you are behind right now, the fastest move is to bring the account current. If you recently missed a payment but have a solid history, call the lender and ask for a goodwill adjustment. There is no guarantee, but it costs nothing to ask politely. Say the late payment was unusual. Explain that the account is now current, and ask whether they can remove the late mark as a one-time courtesy. Going forward, set auto pay for at least the minimum payment, then make extra manual payments when possible. Credit report errors can drag your score down, and fixing them can help quickly when the mistake is serious. Pull your reports from Equifax, Experian, and TransUnion, and look for accounts that are not yours, wrong balances, incorrect late payments, duplicate collections, or accounts showing open when they were closed. Do not dispute accurate negative information just because you want it gone. That can waste time and may backfire if it gets verified. Focus on real errors and include proof when possible, like payment confirmations, account letters, or identity theft reports if applicable. A corrected collection, wrong late payment, or inaccurate maxed-out balance can matter a lot. Clean data is the foundation. Credit hacks cannot beat a messy report. New credit can help or hurt depending on how you use it. Opening a card can add available credit, but the application may create a hard inquiry, and the new account can lower your average age of credit. That is why you should not apply for 5 cards at once trying to force a score jump. If you have no credit card at all, a secured card can be a practical starter tool. You might put down a $200 deposit, use the card for one small recurring bill, and pay it off every month. If you already have cards, be careful closing old ones. Closing a card can reduce your total available credit, which may raise utilization. Keep no-fee old accounts open when possible, use them occasionally, and pay them in full. Here is the clean game plan. First, check which score and reports you are working with. Second, attack utilization because it is one of the fastest things you can change. Aim below 30% and below 10% when possible. Third, pay before the statement closes, not just by the due date. Fourth, ask for limit increases only when they will not tempt you into more spending. Fifth, fix real credit report errors and bring any late accounts current fast. Sixth, avoid risky shortcuts, fake disputes, and unnecessary applications. Subscribe to Money Hacks USA for more practical money moves that actually make sense. The free tools and resources linked in the description support the channel at no extra cost to you. An investment in knowledge pays the best interest. Benjamin Franklin.